the economy is healthy? Like, how does this make sense, man? How are people actually trusting what's going on here?
Yeah, it's amazing to know that the trust has lasted this long, because everything that you just said, I think people feel it in their gut because they feel it in their standard of life and their quality of living. They're working hard, they're making more money, but life is less enjoyable. And that is, you don't need any headline CPI. You don't need the government to tell you to not trust your own lying eyes about how life is and what way the things are trending. But the reality is that, I think they should have cut interest rates by 300 or 400 basis points, because the economy has just gone through the most aggressive demand destruction campaign in the history of finance. So nobody should be surprised. Back in March of 2022, and even before that, Jerome Powell and the officials were signaling to us, we want to slow down the economy. So why should anybody be surprised that the economy has been contracting and the economy is slowing down? That was the goal of the interest rate hiking campaign. Well, it was a successful campaign. The problem is that they should have been fighting the currency instead of the economy, because now we're at the end of the campaign and we have a zombie economy, and it's going to take even more deficit spending from the government to revive that zombie economy and get things going again. They should have turned their focus to the currency. They should have been fighting not we, the people of the economy, but the government spending and the abuse of the currency. But they didn't. And because they didn't, that trust is dwindling. And because they didn't, they see something coming down the pipeline that I think a lot of us don't see coming, or at least those who trust government data wouldn't see coming, because as you said, inflation CPI is coming back down to 2. It's at 2.5, coming back down to 2. GDP says everything is good and strong because they're mistakenly understating inflation, which is overstating real GDP. So, gold prices are going to new all-time highs. What data dependency are you looking at? What data are you looking at that's telling you lower interest rates? This is the first time the Fed has ever lowered interest rates with stocks at all-time highs. What's going on here? What's different this time? What information do they have signaling to them that we need to start cutting or we're going to be in trouble when everything else is at all-time highs? And that's the dilemma. The dilemma is that all of the growth that we think we've had has actually been a result of inflation. All of the nominal price money going up makes you feel richer, but at the end of the day, people are now waking up and realizing, crap, I wasn't a millionaire a couple of years ago. I'm a millionaire now, but I don't have the things I thought I was going to have when I'd be a millionaire. And when you start to realize that you're working hard, you're saving, you're doing what you're supposed to do, but when you look down and you sit and you look at the real math, when you look at the real rate of return, not the nominal rate of return, it turns out that the interest rate that you're being paid on that debt is actually lower than the real inflation rate. And that means in real terms, you're losing purchasing power. You're earning more money, but you're buying less stuff. And that's the most important part of this narrative to maintain trust. And they're completely losing it. And I watched your episode with James, and like I tweeted out, people should send that episode to all of their family and friends because it was a phenomenal episode. James was on fire. You guys were going back and forth. It was fantastic and it was edifying. And it's actually, I think it's a national economic emergency. And people need to share that with their friends and family so they can understand the crux of the problem here. The one thing that stuck out to me, though, was that there seemed to be no solution. And I think there is a solution. I think Bitcoin bonds are the solution. And I would love to dive deeper into that with you. And I think we have to be aggressive with our education on how this instrument would work, because if these socialist communists figure out how Bitcoin bonds work before the capitalists, I think they would implement universal basic income programs. I think they would build different programs off of leveraging Bitcoin's engineered money status into programs that don't make economic sense. So we need to get in there. We need to support people like Dennis Porter and Satoshi Action Fund and all of those lobbyists out there that are fighting for Bitcoin to integrate into the system. And we also need innovation. We need to find a way to create, at People's Reserve, we're creating a debt equity hybrid product. And that's what the principal protected note is, the Bitcoin bond. And the reason I say it's the solution is because it creates a positive feedback loop to the issuer. So if the US government came out and let's just say Trump won, because we know Kamala is not going to do it, right? Crypto for Harris means not Bitcoin, right? That's why it's not called Bitcoin for Harris. It's called crypto for Harris. So we already know that. Trump gets in there. We're going to have a strategic stockpile reserve. Loomis and her bill are probably going to have a much better chance with the president talking about it and supporting it to add to those reserves and start accumulating Bitcoin for the country. And that is what the focus should be, because everybody else is talking about the liability side of the balance sheet. They're talking about how we have $35 trillion in debt. It continues to grow. Deficit spending is growing, making that growth accelerate. We have $219 trillion of unfunded liabilities. So we have a lot of money that we have to print and spend, that we promised to print and spend into the future, which means there's going to be dilution of the dollar. So we need to start figuring out how we're going to protect ourselves when our liabilities are going to increase at such fast pace. And what Bitcoin bonds do is help gets the attention back to the asset side of your balance sheet. Because thus far, the solution has been, you know what? Let's raise the full retirement age. You know what? Let's tie the cost of living adjustment for Social Security to the CPI, because we know it's understating it. So we can save on the amount of additional funds that need to be dispersed to receivers in the following year. And they keep lowering. Yeah, you might get nominal 2.5% raise next year. But again, inflation is 2.5%. So you're barely breaking even if you believe the government, or if you use a source like Govflation, inflation is like 11%. So you're losing over 8% of purchasing power. In other words, the quality of life and standard of living that's being provided for by Social Security is absolutely collapsing in real terms, because you're going to get paid your money, but what you can buy with it continues to decline. And that's all because the focus is on the liability side of the balance sheet, and because these products have not been ever introduced before. This has never been seen before. Nobody has tried to combine and create a hybrid debt equity product like a Bitcoin bond. And how it works is the government would issue, let's say, $1 billion bond, which for them, you and I know, is peanuts, but just for the sake of math, $1 billion bond. And they raised that $1 billion. Well, 800 million would go into US Treasury notes at like 4 to 4.5%. And it depends if you want to get cash flow or if you want to compound it, somewhere in that range. The other $200 million goes directly into Bitcoin. And this is why we call it a principal protected note, because when you invest that $1 billion, your principal of $1 billion is protected by the US Treasury and its printer. Because when the $800 million in the US Treasury 5-year note matures, it matures at a value of $1 billion. So what's left over is the $200 million of Bitcoin. So if Bitcoin goes to zero, which you and I know it's not going to, but some of these people think that's an opportunity to happen. That's a chance to happen, even though you and I, it's make believe. There's no precedent for that. But even if it went to zero, you didn't lose anything, because your 800 million turned back into $1 billion. Let's do another crazy example. Over the next 5 years, Bitcoin has a 60% CAGR over the last 10 years, but over the next 5 years, it just goes down 50%. Again, no precedent. But that 200 million turns into 100 million. So the bond matures at a value of 1.1 billion, and 100 million out of 1 billion is 10%. 10% divided by 5 years in simple interest terms is 2%. So if you buy a Bitcoin bond and the price of Bitcoin goes down 50% in 5 years, you're still getting 2% APY on the note. It's an unbelievable, it's the best risk reward. It's the lowest risk, highest reward cash flow vehicle in the world. And the government can take advantage of that fact and integrate it into their economic policies. My thinking is this: take the Social Security tax, because Social Security is a big problem. Let's take the tax and buy the Bitcoin bond with the tax, right? So it's not like people who are buying the Bitcoin bond. The Social Security funds themselves are buying the bond. Now, Trump talks about collecting tariffs. How about this? Pay our tariffs in Bitcoin. Let's collect tariffs in Bitcoin. Then we can turn around and issue Bitcoin bonds and raise additional monies. I'll stick with Social Security example, but this is an interesting statistic. The United States collected $80 billion in tariffs. And if you portion that out monthly, and then you issue a Bitcoin bond on the back of those payments in Bitcoin, you could raise another $500 billion throughout the year. And that's just with our tariffs now. If Trump increased those tariffs and found a way to optimize that system, you could make up the entire deficit with the issuance of Bitcoin bonds. So that's really exciting. But when it comes to Social Security and liabilities and assets and the American balance sheet, what's so important is that if Bitcoin does what you and I think it's going to do, right? Because if it doesn't do what we think it's going to do, they still have principal protection. If it performs poorly, they still make 2 or 3% APY. The price stays the same, they make 4% APY. But if it does what you and I and a lot of people think it's going to do, because it's engineered money that was strategically designed to leverage the natural laws of economics and price discovery to empower we the people, well, then this thing is going to produce ridiculous amounts of return. Let's just say Bitcoin goes 10x. Now that 200 million turns into 2 billion. The note matures with a $3 billion value. Where remember, just a $1 billion investment. That's 200%. Divided by the 5 years, in simple terms, that's 40% APY. That's better than credit cards. Even credit cards, they have up at 28 and 29. And the level of default is high and the level of risk is even higher. You're talking about a principal protected note shooting out 20 to 40% based on that 5 to 10x performance over the next 5 years. Now, all of a sudden, with a Bitcoin bond on the asset side of the Social Security Fund's balance sheet, you can start to close the program, right? Because you could fund the program perpetually, which is a little bit of my fear, what I said with those socialists and communists taking this idea and leveraging it to create a universal basic income program. We don't want that. We need the right people in charge to make sure we're leveraging these products for the right things that make sense economically. And what makes sense is put some Bitcoin bonds on the Social Security Fund's asset side of their balance sheet. Let Bitcoin work its magic and end Social Security. Don't break any of the promises that we made. Pay out Social Security, finish that program, but close her down. Bring it to an end, fulfill our promises, and then let people invest for and save for their retirement on their own. Get rid of the socialism. Let's move back to the republic. So that's my personal opinion. I don't know if it'll be leveraged that way, but it could be. It could be. I'm hoping it's leveraged that way because we don't need a universal basic income program, but we do need to fix Social Security. So this is the type of thinking, and this is the type of innovation that we're going to see with Bitcoin in the coming years as it continues to get integrated into the traditional system. There's going to be new products, new services that nobody's ever seen before. And we need to be brainstorming these things and teaching the politicians now, because if we fall behind to other countries, we can lose that first market mover advantage. And BRICS, sorry, last thing, I know I keep going on, but BRICS is literally adopting gold. Like they could have adopted Bitcoin and we'd be royally screwed right now. This could be the biggest strategic blunder in the history of the world, that they decided, you know what, we're breaking away from the dollar. We're going to try our own thing. And there just happens to be Bitcoin. There just happens to be the perfect money, the first discovery of money, engineered money. And you go with old natural money. You go with Bitcoin. You don't go with Bitcoin, you go with gold. That opens up the doors for a Trump to walk in and adopt Bitcoin and crush and destroy everything they're doing.